Welcome back. You're watching Business Morning on Channels Television. On the program today, we continue to focus on key issues as they affect the economy, particular emphasis on the devaluation of the Naira. We keep looking at some of the issues that continue to come up. As yesterday, the Naira closed at 183 Naira, 90 kobo to the dollar at the interbank forex market. At the black market, it was hitting about 190 Naira to the dollar. And this is all despite the intervention by the CBN to ensure that the Naira is not unduly pressurized. Well, I'm having a conversation with the regional managing partner of Ernst & Young, Mr. Henry Igbiki. Mr. Igbiki, good morning, and thank you so much for coming in.
Good morning, Harriet.
It was an interesting way for us to end the month of November, with, first of all, because of the declining oil prices. The federal government had to assure Nigerians that there's no reason to panic and, introduce or come up with austerity measures to be introduced to help protect the economy. Then last week, the CBN had its monetary meeting and there was a further tightening in rates, but devaluation of the Naira. And then OPEC had its own meeting and then they maintained status quo on production output. But what are your thoughts with all of this happening?
Yeah, Harriet, thanks. I think we had it coming, that's my view, because if you remember, if you just step back a bit, even before the exit of the former governor of Central Bank, Sanusi Lamido Sanusi, he's done a lot to actually prop up the Naira, support the Naira. And it was just a question of when. How long are we going to continue to support the Naira? When is the Naira going to take the hit? I think there has always been that apprehension. And if you just link that up with the depleting nature of our external reserve, that has been going down, it's been going down, in the last couple of months. And then with the elections at the corner, the anxiety was just there. How long are we going to? Because you can't give what you don't have. If you don't have the fiscal support, the fiscal buffer, how long are you going to? What are you going to keep on giving to support the Naira? I think it goes back to the structure of the economy, which is the fundamental that we'll be talking about. Our economy is not properly structured. We cannot continue to depend on a mono product. The price you don't control, the volume that you take to the market you don't control. So if there's a shock, we just can't resist. And this is what it's been. We've been saying diversify the economy so that you can increase the non-oil sector contribution, to the revenue for the government. This has never happened.
But now, still talking about that devaluation and focusing on, let's talk about the non-oil exports and then come back to devaluation. Yeah. We noticed that the federal government, for most of this year and better part of last year, focused solely on trying to build the agricultural sector. And the Ministry of Agriculture, led by the Minister, Dr. Akume Adesina, has consistently and very diligently tried to see how that can happen. But why is it that with all the efforts, a lot of Nigerians are not buying into it, they're not keen into this positive drive?
I think it's still the level of infrastructure that's available. We need to make more investment in infrastructure. If you just watch, for instance, the analysts will tell you that farmers lose almost 50% of their crop yield because of lack of access to the market, storage facilities. So there's more that needs to go in there to make the agricultural sector attractive to investors. It's a fragmented sector as it is today. But with the right investment, that is the best sector that we can actually focus on to drive, alleviate poverty, increase, the contribution to GDP, and just, spread prosperity amongst the people. It's a very crucial sector. For instance, why should a country like Nigeria be importing foodstuffs, importing rice? We are blessed with, all-round climatic conditions that encourages, all year-round crop production.
Yeah, but the ministry said that has reduced. That's importation.
It's reduced, but of course, it's reduced, but we need to get to the level where it should be, because that's going to put pressure on the Naira. Because you need forests, you need dollars, you need forests to import, to make all those importation. So that is what continuously put pressure on the Naira. So once we can make all those investments, then the importation of rice is reduced, other importation like the fabrics also reduced. There are things that we can produce locally. Even the petroleum products, for instance, why should at this point of our history as a country still be importing petroleum products? Why can't our refineries work? So these are the fundamentals that we need to deal with. If we don't deal with these fundamentals, we just, the solution is not going to come.
Now, part of the reasons why the Central Bank or the Monetary Policy Committee decided to take the stance on devaluing the Naira was because of speculative trading at the forex market, and of course to reduce demand for the dollar and then make the exchange rate more expensive. But we've seen that the Naira is still under pressure. Just like I said at the beginning of the program, the Naira closed at 183 Naira 90 kobo to the dollar at the interbank forex market. At the black market, it was 190.
Yeah.
Still way above the foreign exchange official rate. And
I think what you are seeing is panic. That panic is going to come. I think you're going to see stability, slight stability. But again, the structure is what we need to deal with. So that panic is going to go, is going to go away. But between at the end of the year, you see that it will continue. I don't see the panic is going to continue. And as you go into the next year, you may see a slight stability, and then it will come up again. But because the structure is still deficient, the structure needs to be dealt with, and it will take some time to actually get there.
But Mr. Egbiki, to control and to stave off that panic was the reason why the central bank heavily intervened in the market last week. About over $800 million was sold to ensure that the market would, the jitters will calm down and the investors will be feeling more comfortable and more confident in the policy direction of the Central Bank of Nigeria.
People still feel, if I tell you, if you talk to people on the road, they still tell you that they expect this is going to go to almost 200.
Some even speculate 300.
That's what I'm telling you. So speculation is going to continue. What are people doing now? They are just speculating. They want to buy now and sell later and make money. So as that panic and also speculation, that is going to continue for, as I said before, up to maybe up to the end of January. Then you see slight stability coming through, and also because the people are apprehensive about what the politicians are going to do. They're going to put more pressure. So if this was happening, without the election by the corner, maybe it would be a different reaction. So even if this CBN didn't do this, the Naira was going to take a hit anyway because of the massive spending that was expected as a result of the election. Then it's not like a double jeopardy, So I think it's the days are still hard times ahead, if you ask me.
Hard times ahead. Well, we're hoping that it's not going to be too hard, although, just like you, a lot of analysts are actually forecasting and predicting that that's just what might happen. But in terms of what has happened on the global scale, particularly the oil prices that have been dropping since June, about almost 40% since June, is the hardest drop that has happened to the market since 2008 financial crisis. And that's still also one of the things that is causing speculation, so to speak, at the foreign exchange market. Yes,
people will tell you it's politics between the U.S. and Russia. That's what people will tell you. But that's part of it. Because U.S. is cut down, part of their demand, and that is sending all this pressure, on the price. It's a question of demand and supply. So we don't know the extent to which that is going to go. But again, I think we need to focus. We can't control that. That's where I started from. We can't control the price of this. So we as a country need to know that we can't control the price of this oil. So what we need to do is, structure our economy such that even if this happens, the shock will not be as devastating as it is today.
So for those things that we can't control, how should we begin to position them, target it in such a way that we don't, suffer too much from those things that we can't control?
Well, the only way we can do that, as I said earlier, is, for instance, invest in agriculture, invest in manufacturing, support manufacturing. If you look at the structure of our economy today, our manufacturing contributes about 4.5% to the GDP. If you check that with a country like South Africa, it's about 13%. If you compare that to China, it's about 17%. You can see the mileage that we need to go there. And that talks to the strength of the economy. Because the higher the contribution of this non-oil sector, then the capacity, the more the capacity to absorb the shock if there's a fall in the oil prices. So again, it comes back to what we need to do. And we also need to look at, now we should be talking about, we should be looking at even their governance, the cost of governance. We need to cut the cost of governance. We need to be as lean as we can be. If you just go to the states, what do? or every month they just wait to get the grant, the revenue allocation from federal government. There's no focus on internally generated funds. So there's no investment in industries.
Well, at least not all the states do that.
Some of the states, I mean, most of the states, most of the states. Lagos, okay, there's focus on tax, a lot of revenue generated from tax, but not all states are as lucky as Lagos State, to have the caliber, the high network, individuals that you have in Lagos State. But you didn't need to invest in industries. So we need to, as I said, cut the cost of governance, foreign travels, we need to deal with that. Our consumption pattern needs to change. We are too import, our taste is too import-oriented. So we need to deal with that as well. So you and I also have a role to play. So your shoes, buy locally made shoes. Well, so let's patronize our indigenous entrepreneurs. Of course. And also promote entrepreneurship.
Of course, we know that some of us try to do that as much as possible, but from experience, we've realized that not a lot of Nigerians like to patronize, locally made, goods for reasons of maybe it not being at par with what you would usually get on the international, from the global market, international market. And so, yes, there have been concerted efforts to ensure that your shoes that you, for instance, go to buy in Aba can match anyone you buy from the US or from any market outside of the shores. But we're still yet to get there.
I think that orientation needs to change, that we need to support them to get them to the level of quality that we're asking for. So because we don't support them, if we don't patronize them, you will never get them to that level of quality that we want. So we must continue to support them, also as a part of national, orientation, national, patriotism. We can be as good as the country that we admire today, if only all of us can focus on doing the right things.
Now, talking about doing the right thing, there's this debate that devaluation will definitely, will somehow dollarize the economy more. Do you think that will happen?
I don't think so. How would you mean by dollarize the economy more?
Because you find a lot of people now holding on to the dollars more than wanting to hold on to Naira, because you feel that with $1 you can get close to 190 Naira.
That's speculation, that's trading. That's what I said earlier. People will rush to take the dollar now because they want to sell later and make more money and get more Naira. And people would like to store their wealth in dollars, because what do you want to do? You want to store your wealth in a currency that is, do you think is stable, or that will not depreciate, that will not be devalued. So that is natural. That is just rational for every descending investor. So that is going to continue as long as the Naira remains weak.
So is it also rational to continue to, for the Federal Accounts Allocation Committee to continue to disburse monthly allocations to the states, the 3 tiers of government in dollars? Hold on to that thought. We'll come back to it. You're watching This Morning on Channels Television. On the program today, we're still talking about the devaluation of the Naira. We're looking at the recent developments on the foreign exchange market, as well as how it affects the economy as a whole. The Naira yesterday at the interbank forex market closed at 183 Naira 90 kobo to the dollar, and at the black market 190 Naira to the dollar. Of course, all of this strongly out of the target band of the CBN's official Naira to the dollar exchange rate of 168 Naira to the dollar. The conversation continues in just a moment. Please join me again.